All right, so I started recording this session. So today we're gonna review the strategy number 1, sudden move towards trend optimizer line, the 2024 performance. So what are the conditions for this strategy? And remember, you can go and check our strategy section in our Discord. Here strategy, and go to strategy number 1. It would be this one. And here are the rules. So key requirements: there should be a previous higher high for long entries or a lower low for shorts, and there should be no nearby liquidation levels below the trend optimizer line for longs or above. So let me just do this. These are the conditions for our strategy, number 1 and number 2. So very simple. Very, very simple. All right. So let me just go to the 2024 chart. I'm going to start reviewing this. Just let me move this here. All right. Alrighty. I think I got it. All right. Just give me a sec. I'm gonna return to Hangout. All right. So let's begin. So we're gonna start with the weekly chart. If we go to the weekly chart, just little this. If we go to the weekly chart, let me just hide all these numbers here. I'm not gonna use it right now. All right, let's make it simple. So 2024 started right here on this line. Right now. 2024 started right here. All right, so all of this between these two vertical lines is the 2024 action on the weekly chart. So what are the requirements for this strategy? As we just mentioned, it requires price coming from a higher high. In this case, this is a higher high. Where is another higher high? You could say this is a higher high. All right. And touching the trend optimizer line. So in this case, what would have been the scenario for this strategy? And it is named sudden moves towards the trend optimizer line because it is mostly the first touch of the trend optimizer line after a higher high. And the first touch usually comes with a big movement like this. So in this case, you have a perfect scenario here when price was coming from a higher high and touched the trend optimizer line for the first time, right? So this was perfect move. And in this case, you have to set your limit orders right here, right inside this box. You have to set limit orders right at the trend optimizer line or slightly below, and set your stop loss a little bit below this, so you have some room in case there is a small wick below. So in this case, it played out really well. Where do you set your targets? It depends. What I would do for these quick moves, because this is probably the most, no, this is definitely the most powerful strategy for gains, for very quick gains, because you can gain those, you can have huge gains in a matter of minutes using this strategy, even on the weekly, because usually when you have this touch, it bounces very fast. So if you're in big profits, just take profit. Take profit, close half your position, move your entry to a stop loss. There's not a specific target for this move. If you're in big profits, just take profits. And yeah, and you use leverage with this move. All right, so you can see here, this was a perfect example of the strategy number 1 on the weekly. So on the weekly, is there any other case? Also, you can make the case that this was a lower high. But for this strategy, it does not matter because we only count the higher high And if there has not been any test of this line, then we don't consider this lower high, because there has been a higher high before a test of the trend optimizer line. All right. So this is the first test. For example, this one does not count because this is not a higher high. This was the high. This is not a higher high here. Probably would have count if the price at least closed above this one, so we could make the case that it was a higher high compared to the previous one. So this case does not apply. Neither this one, even though this one have been successful, just to be very strict, and this one have not applied because this is not a higher high. But you can see this line is very powerful. Sometimes there are 2, 3, 4, 5 touches of these successful bounces. But each time we test this line, the chances for price to go a little bit below and to kill your entry and hit your stop loss are higher. So here's a quick tip here: if you're gonna use the trend optimizer line more than once, not just sticking to your strategy, just try to set your your limit order below this line. Right. So this was the weekly. Now let's move to the daily. So we just had one shot for this strategy during that 2024 using this strategy. Just one, and I had 100% accuracy. And if you catch this move, it was a 25% move. So it is a huge trade. All right, just one. You don't need to trade. That's why I say you don't need to trade every single day. You just catch these big moves with big money, and you're set. All right. Now let's move to the daily chart. So on the daily, we do have much more of these cases. So let me just delete what I just wrote, because I did this exercise previously. Let me just enable all my drawings here. All right, now give me a sec because I will pause the record. All right, ready. So for the daily, and remember our parameters. Try number 1, there should be a previous higher high. There should not be nearly liquidation lines below the trend optimizer line, and we're going to talk about liquidation lines here. If you have a expert membership and you don't have access to the liquidation lines, which is this indicator here, just hit me a message on support, because I give manual access to this indicator, because it's relatively a newer one, not included on the regional indicators. All right. But it's not a must for this indicator. I mean, you can use it without it. The liquidation levels are much more useful on the second, third, or fourth touch of these trend lines, but not necessarily not mandatory for this strategy. But it's mandatory the higher high. All right. So let's say here, what happened here? This is where the 2024 started. This is where it ends. All right. So let's begin. First higher high here, and we have this touch of the trend optimizer line. And let's replay this. Let's replay this. Okay, we went back in time using the replay bar feature of TradingView, and I'm gonna label the. All right. So you can see here, yes, there was some liquidation lines here, but we're coming from a higher high, and there's also great concentration of liquidations here. So this is a valid entry. I would just have to set my stop loss probably around here, because there are some lines, but I could enter here and set a stop loss here. And you see, and as we're coming from a higher high, I think it should be all right. So in this case, we already know this one played out. Let me just. So you can see this price action in real time. It went down, went a little bit lower. That's why I said we set our stop loss around these lines. And we already know that it bounced from here, right? We already know price bounce from here. So this was successful as well. All right, let me exit the replay feature. I think it's very, very clear. The beautiful thing about this strategy is that it's very simple, but you need to be patient. You don't have to rush because let's see how many times it appeared here. For longs, it appeared 1, 2, 3 times, only 4 times during the year on the daily chart. So you have to be patient. And for shorts, probably 1, 2, 3 times. So the strategy only flashed 7 times. All right, so number 1 was successful. Let me add. Number 1 was successful. Number 2. So no touch of the trend optimizer line. Remember that the thinner line is the short-term support, and the thicker line is the long-term support, which is more powerful. But for purpose of this, for this strategy, you can use both. So another higher high, we have another test here of the trend optimizer line and another beautiful bounce from here. And let's replay this again. Not gonna replay every single strategy, but just so you understand the strategy a bit better. Sorry, I think I did it wrong. All right, replay. Go here. All right. So price was way above. We have liquidation levels way below. When the liquidation level is way below, you don't have to consider. You only consider if this line breaks. You consider this line, especially for setting your stop loss, and for setting your limit order in this case, because we're coming from a higher high. So that's why those are very useful. And I think I have to make this a little bit better. There could be liquidation lines. So let's say the condition number 1 and additional info. Let me rephrase this. I would say use nearby liquidation lines to fine-tune your stop loss. All right. I think it's much more clear right now. Because we're coming from a higher high. If it were the third, fourth touch, as I said before, then yeah, you have to pay much more attention, and will you probably set your limit order lower. But I will not mention here because that's a completely different strategy. All right. So number 2 was successful as well. Here, what happened? We have the sudden move towards the trend optimizer line, literally, and we have a perfect bounce. And that's what I said. I mean, you don't have to be very greedy on this one. Just make this trade. For this, you will have made an amazing. Let's say here it did not touch, so we could say that here you miss it, but you catch it the next day. So we could say that you made a very fast 12% profits. On the daily, we use leverage. So that could be like 120% profit in just a matter of seconds or a few minutes. Well, so you can see this strategy is very, very powerful. All right, that was the number 2. Number 2 was successful as well. Number 2 was successful as well. What else? So here, will this have been a valid scenario? No, because there's no higher high. There's no higher high here. So yeah, you could have made this trade here, but this is strictly not the strategy, and it worked perfectly. Sudden move to a trend optimizer line, and it worked out perfectly. But this is not a strategy. This is a little bit more dangerous. For this, you can use the strategy number 2, but we'll talk about that later. But I mean, if you were waiting for a trade, probably some confluence with lower time frames, you could use this line and go to the 4-hour and see if on the 4-hour there is a higher high. But it's like a little bit more advanced. I'm just gonna stick to one time frame right now. Here in this case, this third touch, yeah, it does not apply because there's no higher high. I'm gonna go for longs first. So let's move to the next scenario. Here, yes, here it does apply because it's the first touch of the strong support after coming from a higher high. In this case, this is a higher high and this is the first touch, right? So yeah, in this case, it does apply. And we already know, just visually, that we did get a bounce. Went a little bit lower, but I think for this huge move, you could have been safe with a stop loss here, because you have probably said something like this, aiming to recover probably the previous levels with a 3.4 risk reward ratio. So this would have been totally fine to sell your stop loss here. This would have been very, very feasible. So let me just, this would be the last reply we do here. Then we move a little bit faster. Trend optimizer line. Yeah, there were plenty of lines. When there are plenty of lines like this, it's very difficult to pay to choose one, because there are plenty of liquidation level because price just went up non-stop. But you can see there was some thick lines here of the volume liquidation lines. It means that most probably the price was gonna touch these lines, and it did. You can use probably these lines to set your stop loss reference. So yeah, it would have been useful as well. You can see, very simple, very elegant strategy. It's probably one of my favorites. Probably, yeah, between my two favorite strategies. It was much easier to execute. I only using one indicator, guys. I only using one indicator, which is our trend optimizer lines, which is a beautiful indicator. Now I'm gonna pause. Sorry, I'm gonna do it again. All right, we'll continue. So let me know if you have some questions. I know you have. You're very active.
Yeah, one question. So on the left side, all the way like to the higher high, we go down to the dip, and there's the check mark, and then the next dip, and there wasn't a check mark. So you're saying that one, the second lower low, where you have LL, yeah, exactly that one. You said that one wasn't coming from a higher high, but number 3, you said were coming from a higher high.
Yes.
So, yeah. So are you referring to the higher high on the far left that says SHH, or are you referring to the...
Yeah. So I'm gonna rephrase the question, because I'm not recording your voice. I'm gonna rephrase it. So Lid was asking if this, why do I consider this basically for the strategy number 1, and I consider this coming from a higher high like this one, because this is the first time we're using this line, which is different from this one. This is the strong trend support. So in this case, this is the first time that is coming from the higher high and is touching this line. You see? So that's why I consider this scenario, and I don't consider this scenario because this is probably the 5th time that is touching the same line coming from a higher high.
Yeah. Okay. So I think I misunderstood. So I thought where it says LL on the left side, I thought you said that one wasn't coming from a higher high.
Yeah, this is not coming from a higher high for if you're using this line as reference, because you can see this is a lower high, because it bounced, then it made a lower high compared to this one. Then it bounced once again, and it made another lower high. Bounce, lower high.
Yeah.
But it has never bounced from this one, so this does not apply to this strategy, because this is just the first touch of this long-term support optimizer line. So this too does not apply. We just use a high here. So for this strategy, for this line, let me just... For this strategy, it just happened something like this. Went up, went down. First touch. Right, so this is a higher high. If you use this line, right? And if you look at the other way, if you just using this line, or for the effects of this line, then it made a lower high. Right? It made a lower high, went down here. So this would have not been a valid scenario for this strategy as well, because it made a lower high if you're using this line. So you have to probably chart or make two different notations just to make sure you're using the correct line.
Okay, I think I get it now. So let me try to read it back. So it's you're considering that it's coming from a higher high if it's the first time that it's approaching a trend optimizer line since we had that higher high. So that's why the first check mark that you have, where I'm guessing that's the short-term resistance.
Yes,
That was the first time, but
this is
then
the first time it does.
Exactly. But the second time it touches, it didn't make a higher high since
Correct.
the first time.
Exactly. It didn't make a higher high since the first time. All right.
Right. And then number 3, which is the first time it touches the long-term support, that is the first time it touches the long-term support since it made
a higher
high.
Exactly.
Yeah, okay.
This is the first time it touched that long-term support since it made a higher high. Exactly. Just like that. You will have to hide like this line just to make it easier for you. And just imagine this is the only line here. And you can see this is just the first time it touches this line. All right. So this second one, yeah, this would have not been let's say an entry for this one because it made like a lower high compared to this one. You could have made a case for this one. Let's say here it appears once again a short-term support trend optimizer line. But again, this was not a higher high. But you could have made a case because this is when we enter like a gray line here or gray area. You could have made the case that this was the first higher high before it touches this trend optimizer line here, and in this case it failed, right? You could have made this case here, and you could say, well, this was the first time it touched the short-term support. In this case, it failed. Just to be a little bit strict, you could make this case. Oh, this is the first time it made high high. Technically, a little bit difficult because it just started. This has not been like a lower low here to say this was a higher high or a lower high, but you could make this case, and you will find some gray area scenarios, but easier. Just to make it easier, when you think this like in the gray area, you could just skip this one and don't trade it. Just to make it easier for you, and just trade the ones that you are very, very clear that are coming from a higher high. All right. So this one does not apply. So let's move to number 4, all over here, because you can see no test of this line, no test, no test, no touch, no touch, and we go all the way here to another touch of this short-term support. And in this case, it's crystal clear because there's no touch here. This is the first touch coming from a higher high. This is crystal clear. It touched and it bounced. And this is why I say this strategy can make us quite some money very fast because this move probably happened in a matter of minutes. In this case, it was like a 6% bounce, but it was immediate profits and perfect bounce. Literally, it bounced exactly from the short-term support line. But in this case, you would have to be ready because you probably missed this one if you were not on your PC. So you have to set your stall limit, your long position in advance here. You have to set your stall. Otherwise you would not catch these quick moves. And we have where would you have set the target here? Yeah, probably you have to be a little bit creative here, but probably looking for previous highs. Yeah, they would have make sense because it's, let's say, even here is a 3.0 risk reward ratio, so it makes sense. So another quick tip here: set your limit orders, or you will not probably catch the trade. Right? So this, I think this was a very clear case. So the second one, no, because it comes from a lower high. This was I mean, we could say that they have one successful retest. You could probably count this one, but this is definitely not a strategy because it already touched this one. There was another huge bounce, another one. So this line is beautiful line, but not just for this strategy. This is more like strategy number 2, and we'll talk about that later. All right. So on the daily, we see we had during the year for longs 1, 2, 3. Let's count this one, for example. 1, 2, 3, 4, 5 occasions, and we have 1, 2, 3, 4 successful bounces from the trend optimizer line, which were, I think, crystal clear, literally crystal clear. So that would have been 80% accuracy, which is huge. Even considering this, that you could make the case that you should have not taken this trade. All right. So now let's move to shorts. And for shorts, you should also know that you can use the strategy, but during a bull trend, and then here you could use the trend. You should be more careful. And probably, this is not necessarily, not mandatory, but you could probably use our rider band here just to detect the trend direction, or the overall trend direction here. Yeah, all this time it was neutral. It was like, yeah, kind of neutral, gray. But if you go to the weekly, it was definitely bullish trend. But overall, you know that I always prefer longs versus shorts because of these huge moves. But let's say, let me just go. Where would have been short scenarios here? Nothing here. Here we have our first line. And in this case, this was the first touch of the trend optimizer line. And we have also a perfect reaction here. And we're coming from a lower low, which is this one. And if it's not this one, you could make the case, no, but there has been lower lows here, yeah. But anyway, it's coming from a lower low. Regardless where you find the lower low here. So this one was a successful one. We have this reaction. And you can see on shorts during a bull trend, the moves are not so powerful. But you have 7% reaction from here. Beautiful reaction as well. It was reacted exactly from a trend optimizer line. So then price came down, made a clear lower low, and then touched this, and you could make the case here that this time it fell. But let me just review it depends on where you set your stop loss. But let's make this here. So if we were using you can see there's some liquidity here, very strong liquidity here. So you know the price could go on and try to test this zone, and let's see what happened. But it has been difficult because if price, you know, that will probably go and touch this zone, then your target for a successful trade should have been all the way down here. Could happen because this is a line like this move. But for this to be a little bit less ideal, or I mean more safer, you would probably should have set your limit order a little bit higher. And this is where your the trend optimizer lines help you fine tune this. So for shorts, I would always be careful, much more careful than for longs. Let's say something like this. Yeah, if you were aiming for something like this, probably was okay. But I will not force it. I would say that it failed. Probably for some traders, it would have been successful if you were a little bit more careful. But let's just say for the average one, like it fell. All right. So this is where you see like, yeah, this strategy is very elegant, it's very simple. You can execute it textbook, but if you have a little bit more experience, you can make even higher results with this one. So let's say it barely fell, it barely was not successful. Then we go next test here. This is a very similar scenario. Probably I would say this was successful because price just went a little bit higher. But let me check if we're coming from a lower low. Yeah, we're coming from a lower low here because this is a lower low. We test here. So just to restrict with this one, I would say, yeah, this is kind of in the middle. I would probably say this was successful. I would probably say this is successful. Yeah, because you know there is another level here, so you know the price could be a little bit higher. Yeah. Yeah, there were no lines here. Yeah, there were no lines here, so very difficult to know. Let's say I would have said, yes, because we have this, I know the price can get a little bit higher. So yeah, I probably would make something like this. Yeah, this makes total sense. We have here, we have it. Yeah, I would have made something like this. Let's see what happened. Let's see what happened. So price went up. We tried to broke this one. Yeah, I don't know if it will have. Yeah, so this would have been successful. Yep, this would have been a successful trade. So we'll mark this as success. Opa. Success. All right, let me stop recording again. All right, so 1, 2, 3. This one is not coming from a higher high. Sorry, from a lower low, because this was a lower low. It went up. It made a higher low. Yeah, this is not coming from a lower low. So, sorry, this is a long-term resistance. So in this case, we have to consider that this is the first touch of the long-term resistance, just to apply the same rules. So yeah, in this case, we have to consider this one. And it's coming from a clear lower low. So yeah, I think it would have been successful as well, because you got probably set you got pretty covered with your stop loss. And as you can see, there are so many times. So setting your stop loss here would have been very reasonable. Very, very reasonable, I would say. So yeah, for me, this was another successful line. Ideally, we want these perfect bounces. But if you're going short, it's a little bit more riskier. And you have to be more careful where you stop loss. All right. So we have 1, 2, 3, 4. Yep, just 4 trades during the year. And let's say 3 out of 4. That's like 75% if I'm not correct. If I'm correct, 3 out of 4, 75% accuracy for shorts using this strategy. You could have made the case that you could even manage this a little bit better and make 100%, but let's just say 75%. So yeah, beautiful results. Very, very beautiful results for this strategy. We're just talking about 100% on the weekly, 80% on longs on the daily, 75% for shorts on the daily, which is remarkable during bull run action. So I think this is a very, very powerful strategy. But very few trades. Just one trade on the weekly during the whole year. And probably, let's say, 1, 2, 3, 4, 5, 6, 7, 8 trades on the daily during the whole year. That's why you don't see me trading every single day, because I prefer to wait for these scenarios and go big. and go with a higher amount because I know the accuracy is much more reliable, and I could make the same or more money trading this than trading every single day. But that's just my style. I prefer to have like a more calmer style. We see some green today. Yeah, but I'm gonna go into that. Yeah, but I think we're ready. I think we're done. We just reviewed the whole 2024. You both for the weekly and both for the. You can make the same exercise for the 4-hour chart, for example. It would be exactly the same. But I always prefer to do it on a daily in the week. I have not done this exercise on the 4-hour because there would have been much more scenarios that would take me much more time, but it's exactly the same. And sometimes these lines align between time frames. Sometimes the shorter time frame on the 4-hour it's at the same level that the same line on the daily. That makes the line a little bit more powerful, but it's like that's just a little bit more advanced, and it's not mandatory. You have seen I made this very, very simple using just one time frame at a time, using just this indicator, and just to manually look for these higher highs and lower highs. We're working with our software engineer on just automatizing this strategy, so we have like small circles appearing when the price is approaching this line coming from a higher high, and some signal that alert us when this scenario is going on. But it's going to take some time because it's easy, but it's very, very difficult to code. Yeah, so I think this is now. So let me know if you have some more questions. Otherwise, I'm going to just end the stream and upload this one.
I have one question.
Sure.
That's so
all right. So he was asking about the volume liquidation lines. So I would say this is kind of an advanced indicator because you can see a lot of lines. It could be confusing. But all these lines does not apply all the time. These lines apply for the last candle, right? So we have to zoom to where the price is right now. And what these lines look for is for levels where leverage trades would be liquidated. So if lines appear above the price, it means that if the price gets there, most probably shorts will get liquidated. So if the price approaches this line here, shorts of people that probably started shorting here and are in profit, if the price starts to move here or started shorting here, if price starts touching these lines, then all these people will get liquidated. And that's usually something that happens in the market a lot. Like, you know that people punishes late traders, so people get liquidated all the time, and these lines try to look for that, and are filled more often than not. But not all lines are filled all the time. There are you can see if we zoom out, there are quite a few lines that have not been filled yet, and will never be. So we don't use it like on the macro. We just use it to fine-tune entries like we just seen with the stop loss and that. And on the other hand, the lines that appear below the price are for shorts liquidation. So at those levels, the shorts will be, long liquidation. At this level, for example, longs will start getting liquidated. Probably longs that started here because the line starts here. So if someone enters a long here, if the price gets all the way down here, they will probably get liquidated. Why there are more than one line? Because it depends on the leverage. If you use 10 leverage, 50x leverage, 100% leverage, your liquidation levels will be different. And sometimes the thick of the line, you can see this is a little bit thicker, indicates that there has been more volume that could be liquidated at that level. So that's it. And the colors, don't pay too much attention to the colors. Just pay attention if it is above or below the candles, because the colors represent the leverage. So, for example, green could be for 10x leverage and blue could be for 50x leverage, for example. But don't pay too much attention to the colors. Pay much more attention to thicker lines because there's much volume on that level.
Okay, so is there any way to sort of estimate what the price movement would be? So like there are two lines around 88,000 price range, and then there isn't really anything below it until 82, 84. So if the price were to, if the price approached 88 with like fast enough momentum that you think it's going to touch it, then would you be maybe expecting to get in around 87 or 88 or?
I mean, that will be no strategy because there's no strategy that they talk about that. That will be no strategy number one. That would be if I got it correctly. What you were asking is if price gets here, do I think it would get all the way down here, something like that?
Yeah. Well, I guess I'm trying to understand like how to use the lines. So I understand that they're showing where stop losses most likely are for shorts and longs, and thickness of it shows how much volume
in that case, you have not used a line here because this was not a setup. Remember, this is a lower high. So in this case, you would have not used the line. You would only have used the line here because this was the ideal setup. So in this case, you would have not to worry about this. And if we go all the way back here, where were the lines back then? Because you have to use the replay feature. Let them load. Yeah, there was a line here. Probably this is the only closer line here because this is way below. And when the lines are way below, I would not pay attention on the short term. I would only consider this if the prices are trading below here with closed candles. When there is this gap, for me, it's safer. It's safer. When I see there's like big gap, yeah, I don't pay attention. And for me, it's safer to assume that this will not get filled on the short term because it's like a very long gap. So yeah, for this strategy, you could probably use this as reference, even though it's a little bit far. 89 versus 91, yeah, it's a little bit far. But I mean, if you want to be very conservative, yeah, probably set your stop loss all the way down here. All right. So that's why I say that this volume indicator could be a little bit confusing. That's probably why it is for advanced trader a little bit. But if you just stick to the strategy and use it on that context, then it's much easier because you have to give it a simple and single purpose, which is just to fine tune your stop loss on a specific scenario. So yeah, that was the question.
Right,
Noah, go ahead.
Something?
Yeah, go ahead, baby.
So,
go ahead, buddy.
For me to understand what you just said just now, if it ended like on a higher high, right? And you mentioned that the last candle that went all the way down to make a lower low right now. You're saying that if it didn't go all the way to a higher high, it didn't break the one before, I don't have to worry about like going all the way down because it was a lower high.
All the way down. What, right now? If you're going to
no, so you know how you mentioned that the last candle on top, it says like it was a higher high, right?
Like this one is a higher high.
Yeah, perfect. And then the other one was a lower high.
This one is a lower high. Yep.
Exactly. If it, let's say, it would ended up being a higher high that broke the one before, and
something like this.
Exactly. No, the one in the middle. If let's say the one that was a lower high became a higher high.
Okay, so let's say we were here. Let's say we were here, and this, so I can follow you, and this
became a higher high.
Yeah, became something like this. All right. So
okay.
What?
And then went all the way down. Should have worried that it would probably break the short term resistance and go all the way down to the long term because it went higher than the one before. There's more liquidation to that.
I mean, why would you worry for that? I don't get why. I mean, you can worry all the time, but that's not. I mean, that's not a strategy at all. You already made your trade here, So you could
Exactly.
hold your trade, but at this time you would have been on such an amazing profit that I would have already taken profit, or move my stop loss gradually, and don't worry at all if price is going to go down here. I mean,
Okay, I
these entries are not to hold forever and hoping that Bitcoin goes to 120K. No, these are leverage trades. So
yeah,
probably
yeah,
probably at this point, if you use 10x, you are at 200% profit. So it's way above
yeah, yeah.
a regular trade. So yeah, don't worry. I mean, you could worry
No,
about everything, but in this case, you are in so much deep profits that you only have to lock profits, and no worry. Just make a process out of that.
got you. Because for me, I was trying to understand because you told him that because it became a higher high and it became a lower high and then touched the band, that he didn't have to worry about like it was gonna go even lower because it was a lower high instead of being a higher high. So that's why I was like, just asking. Just I mean, I for example, I know it's like a little bit dumb because if anybody sees that Bitcoin going even higher from the previous high point, you should sell for sure and take profit because that's the whole point of doing on trading. But it was just like a honestly, it was an extra question, but I just wanted to understand because since I saw that you told him that since it became a higher high, then became a lower high, a high, and touched the low short term, and he was asking if since there was a lot of like longs on the bottom, that I didn't have to worry about it to go even lower because it was just a lower high instead of being a high. It was a lower high, so that's why I was trying to ask if it was different the situation.
Yeah,
I don't know if you, I don't
yeah,
know if you follow me. Sorry about that.
yeah. Don't worry. I think we solved this. Um, just to complement that, because and this is probably not part of strategy, but in that case, I would enable the RSI streamline. For
Hmm.
example, you were saying, what if? By the way, you would have this was a trade, right? This was a trade,
Yeah.
and you were probably already should have taken profits here or locked your entry, because even here you are on deep profit already. It would be
Hmm.
7%. With the next level is 70%. I always take profits at 20-30%. I started taking profit there for these quick moves. But for these scenarios, I go big. I go with a large amount because I know this only happens 4 or 5 times a year.
Got you. Okay.
So I mean, you would have not probably be holding this trade, but you could have been holding this trade, and even you would have been still on the trade because your stop loss would have been still holding up. But
Hmm.
you should have taken profits already or locked your entry already. But let's say you didn't, and the price went way here. Then I will just start considering this stream line and only close once it close below, right? But this is a completely separate scenario, and it's even another separate study. But even in this
Hmm.
case, if Bitcoin went nuts and went above, yeah, you mentioned, yeah, if Bitcoin went another high, you should take profits. Yeah, you should take profit. But in that case, if it is above the stream line, we enter a separate scenario, which it could go parabolic. And in that case, I would take profit if close below the line, the stream line.
Okay.
All right, that's
No,
like
yeah.
yeah.
Sorry about that. I was just like,
No, it's
I
okay. It's
kind of
okay.
like, I saw you like, you mentioned something about the lower high, and he was like talking about the if he should worry about like, since there was so much longs on the bottom, and it was like, sometimes Bitcoin pulls to the liquidation because there's so much. If it's 100 times, 50 times, it's like, um, es como que lo pide. Sorry, I just don't know how to say it in English. It's just like, es como que siempre tiene que bajar porque tiene que el mercado te hace eso, te hace el pullback porque there's so
Yeah,
many
the
longs on the
market loves
bottom.
to hit the liquidation levels, and let me
Yeah.
just show you this example here. It will, I think this would make a little bit easier. Let's go back. Let's say how are our volume key level. You can see here there was only one line. Let's not consider it. There was only one line here, right? And
Mm-hmm.
let's hit play. So you shouldn't have worried too much about liquidation level because there was only one line. Yeah, probably use a stop loss, but just one line, one thin line as well.
Would you set the stop loss just above that thin line or just below it?
Or probably right up there, probably right there, because it is way lower here. So I would probably set something like this is sorry in the short one. And probably you couldn't even not use it because it's way below this one. Way below this one, and we're coming from a clear higher high, so it's not mandatory in this case to use this line because there's like a big gap here. I will use it if there's a line a little bit closer. But I mean, if you want to be extra safe, you could probably do something like this, right?
Okay. Right. Yeah. So the level above that, I guess, are the wicks to the left, because there's like nothing. There's two long lifts on the far wicks. Yeah, exactly, on the far left, and then there's nothing between them and the thin liquidation line.
Like here?
Exactly. Yeah, there. No, above the liquidation line. Exactly.
Yeah, there's nothing here,
exactly
so it seems safe because there's nothing here. I mean, it's very difficult. You will find some scenarios where there are lines very tight here, and that's very obvious, right? In these cases, but those scenarios usually happen on the second and third retest, because, and I don't know if it will appear here. Let's say if it appears here, so I can make my point. Let me see. I don't know if there were other liquidation lines that appear here or not. Let me see. Like we need a bounce to appear more lines. Let's see. There's another one. It's a little bit slow because we're in the daily. Yeah, I don't think.
No, there we go.
Yeah, there we go. But in this case, these are above this line, so we will not use it. Here, there was one. I don't know if you see it. There's one here. It disappeared because it already was tested. Yeah, so let's make this a little bit slower. So we have this line that was hit, and you can see here for a second, there's another line that appeared here. You see?
Mm-hmm.
So if we get this one, we are not using strategy number 1 anymore. We're probably aiming for strategy number 2. We're not using the number 1 anymore. But if you want to go on alone and you're aiming for a retouch of this one, you know that it's highly likely that price will touch this line. You see?
Right. So you would set your limit order right below
probably
that
there.
liquidation line or on it?
Yeah, I will probably use my limit order here. I mean, there's not much difference. You could set it here. You can set it here. I mean, there's not much difference, but there's 92.2. But I mean, if it probably price is already there, I slowly went here, then I would use it a little bit lower.
Okay.
Okay.
Right.
But if the price hits the liquidation line, then chances are that it's gonna go, it disappears. But then chances are that the price will go at least a bit lower, right? Because you have the liquidations.
If it hits the line, it already was liquidated, so chances for a bounce are higher. Not necessarily will go lower. It already got liquidated.
Oh, I think I misunderstood how the lines work then. I thought it was that, like, the line is around where the stop loss is. So I thought that if it hits that line, then the liquidations will happen, which in this case would send the price a little bit lower because they're forced to sell.
I would probably say that will happen, like this cascade effect. Like this is a cascade effect that happens when probably there are like a big chunk of liquidations probably there. Like there are some scenarios where we have something like, I don't know, you have all these lines, right? Let's say price it's around here and start hitting this line. You know, there's very high chances that it's gonna cascade and start liquidating all these guys, right? But when there's just one line and there's not much above, this probably not strong enough to cascade the prices on that direction. Just strong enough to go there, right? Because it takes
just one line and it's thin, so it doesn't show that there was a lot of volume.
Yeah, when you see that big block of line, then you know chances are higher to prices start cascading to hit all those lines.
Okay.
All right. But again, for this strategy, I think we're safe. Let's say if another line appear. Yeah, so you can see it hit this one, went a little bit lower, but you know that it went below the line. You knew it was much more likely, and then it disappeared. Then we had this line, but this one we are not trading, right? Because there's no reason to trade this one as well. It's very risky. So yeah. At this point,
So
this is called. At this point, this is probably called so you're trading because you're bored. You need some action. But at that moment, you know that you should not be trading, or you probably should go to the 4 hour and look for a setup there because the daily is no longer a good guide, right? So nice. Let's see, Bitcoin is breaking this one right now.
A quick question. So for strategy 1, happened a few times a year. You said that those are usually more powerful, so you usually put in bigger allocations. So
Yep.
what kind of risk do you put in on that? I'm very new in this, so so far I've only learned like the rule of thumb in that like you put 1% of your trading account towards your various trades, but it sounds like you would put more than 1% towards